Hey guys, it's Chris Wong. For this video, I'd like to talk about two ETFs, USCL and QQCL by Global X, which used to be Horizon's ETF. So as a disclaimer, I'm not a financial advisor. I'm just a guy interested in building a portfolio. So recently, I actually sold some shares of HDIV and HDIF. I still decided to keep those two. I didn't want to eliminate them completely, but I actually decided to stock up on USCL and QQCL. The reason why I decided to switch more into USCL and QQCL is because the dividend yield is higher, and I think it's also as sustainable as the other two. So when I actually did the calculation of the dividend yield of USCL using the last dividend and timing by 12, and then dividing it by the highest share price I've seen, I came up to around 12.7% annual dividend yield. So that's the assumption the share price stays that much, and that's the assumption the dividend for each month is going to be the same. And QQCL is around 13.2% dividend yield. So as an income investor, I'm trying to buy shares giving me a reasonable high yield dividend. So I may have tried to get those shares of QQCL and USCL several months ago when the share price was lower, and I did get a higher yield. But as I'm trying to stock up them right now, and I know the S&P 500 and NASDAQ actually went up, but the dividend yield to buy these shares today is still decent for me. And it's hard to predict when those indexes will go back down or when the share price will go back down. And chances are, if the share price goes back down and then it goes back up again, it may not go as low as it was last year. Over time, as I buy more shares and my portfolio grows, the dividends that I will get each month is going to be enough to buy even more shares. And as it keeps on growing, the dividends will make it a lot easier to buy shares without actually earning income from work to buy the shares at a higher price. And it just keeps on compounding over time. So my long-term goal is to increase the monthly income. And I think having USCL and QQCL are two great funds to actually generate monthly income. So even if I buy share prices at a higher price right now, I'm not concerned if the share price drops later and my portfolio goes down a little bit, because QQCL is based on the NASDAQ 100 and USCL is based on the S&P 500. So I'm not afraid it's going to go to zero, and it won't go to zero, because that's saying that all the companies on the indexes is going to go to zero. So let's say, for example, you buy 200 shares of QQCL and the share price you bought it at was $22.68. So I think that's one of the highest prices I've seen. So the total you spent is $4,536. So 200 shares times 25 cents, which 25 cents is the monthly distribution for the last several months, and that comes out to $50 a month in monthly distributions. So each month, assuming you don't sell any shares, you will get $50 in distributions. And if it's in your TFSA, it's tax-free. Now the assumption is you're going to continue reinvesting your monthly distributions, or you're going to buy more shares with your work income. Now if you do $50 times 12 months, that's $600 a year. If you actually did $600 and divide it by 4,536, which is your total investment price based on the share price, then that's around 13.2% annual dividend yield. So far from these covered call ETFs, if the share price goes down due to the indexes going down, a lot of times I found the monthly distributions didn't fluctuate at all. Or if it did, it only went down by like a cent or two, and it's just temporary. And what I also found was I could just buy more shares when the market's down as I continue working. I just try to work harder to save more money so I can buy more shares as hard as possible compared to when the market is up, because the long-term goal is increase my monthly distributions and hopefully I can live off the monthly distributions without worrying about trying to earn income from work. I do have a lot of funds that I do invest in on the Canadian side and on the US side, but mainly for this video I talk about trying to improve QQCL and USCL, and eventually I think those two are going to be eventually my primary ETFs that I will invest in. Just because I decide to invest in these two and try to make them my primary ones doesn't mean you guys should do it as well. You guys should do your own research and make a decision based on what you research. Overall, this video is not financial advice, it's just what I'm doing for myself. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.